check, 1, 2.
Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need, get over the fear, and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with the Michael Quarles Real Estate Show. Thanks for popping in and listening. Today we have podcast 182. And it is 5 questions sent in by real estate investors like yourself. And I'm going to try my best to answer it or answer them. And remember, if you have a question, send it to support@michaelquarles.com. One more time. support@michaelquarles.com. Before we get started, there's just a couple things I want to chat about. First thing is, I'm not certain if everybody realizes that within my podcast, there are 3 types of episodes, which I think is kind of cool. I think we're up to almost 270 episodes total, but there are 3 types. The first type is this one, where folks send in questions, or there's a scenario question, or just random Q&A about real estate, and I try my best to answer those. Those are awfully fun and entertaining, and I think, quite frankly, somewhat educational. The second type of episode is what we call daily deals. Daily deals are live, recorded seller negotiations and calls that we have from our investment company. So every call that comes in or we call out is recorded, and they are then spliced together. So all the phone calls spliced together, all the information like the seller's name and phone number and address, that's taken out. So you guys can actually listen to what it really sounds like from our perspective. And I think that from an educational perspective, those things are tremendous. The third type, and we're excited about this, and you're going to see this one just jump out at you just days away, is I'm actually interviewing 3 real estate professionals a week. Besides all the other episodes we're doing, I'm going to be, and have been, interviewing folks in all types of real estate businesses, from real estate business itself to land buying to where to get the money, wholesaling, you name it, we've been talking to them. So on a weekly basis, you'll hear 3 brand new interviews, and that's going to be under the interview tab at the michaelquarles.com website. So again, 3 types of episodes: the Q&As, the daily deals, and the interview. So I hope you guys are going to enjoy those, and you'll find good stuff from them. Second thing, I really need your help. I need some more iTunes ranking and rating kind of thing. So if you can jump on iTunes, go to my Michael Quarles Real Estate Show and give me your opinion, that would be excellent, because I think it's important for those people out there that don't know about us to hear from you, so that they too can then see a reason to jump on and listen and learn as well. Third thing, if you at all are interested in being coached by me, and you would like to chat with me about that program, I want you to go to your cell phone right now. Right now, go to your cell phone if you're wanting to learn real estate investing from me, and type in the word investor and text that to the number 313131. So one more time, if you want to be coached or want to know about my coaching program, go to your cell phone, type in the word investor, and send that to the number 313131. That's enough about housekeeping. Let's get started into this podcast. Question number 1. How do you structure a seller finance deal? For example, a $100,000 deal. What is a basic model to follow as far as how much money to pay monthly to the seller? I understand it's something the seller buyers agrees on, but what's an example of a good basic seller finance deal and why? Well, it's a great question. Here's what really is the win-win for both parties. In most cases, we're going to be buying a property from a seller who is accustomed to receiving a monthly rent payment from their tenant, because we buy a lot of non-owner occupied property. And so we're going to trade them the amount of money that they've been receiving net, not gross, but net. So if they have taxes and maintenance and all that other stuff, payments, those kinds of things, we're going to, whatever they're receiving net, we're going to try to figure out how to continue to pay them that amount of money if it's reasonable. That's the key component. It has to be reasonable, it has to be fair, it has to be a win-win for both of us. But let's assume for a second on a $100,000 debt, they've been receiving $500 a month net. I don't know if the numbers work or not. I'm just using numbers. So don't say, Mike, 500 is too much, 500 is not enough. I'm just using 500 as a number. And, the first thing I'm going to ask them is, if I could show you a way to replace or continue with the income that you've been earning without the responsibility of ownership. So if I took the responsibility of someone calling me in the middle of the night saying that the toilet's broken, or if I took the responsibility of the stress of whether or not someone's going to make their mortgage payment, or if I took the responsibility of making sure there was insurance on the property and the maintenance of the property, and I continued to pay you your net amount that you were receiving on a monthly basis, you would go ahead and sell me the house under those terms, wouldn't you? Always an embedded command, guys. Always an embedded command. And if they say, yes, I'm going to take the $500, and I'm going to say, great. If I were to take that $500 and I divide it over into 100,000, that means I'm going to make you an equal payment for so many months. Does that make sense? So 200 months, equal payment. I'm not bringing up interest. Now, if they want to bring up interest, 2%, 1.5%, 4%, 3%, whatever it is. They may even want a balloon. They may say, hey, I want to be all paid off in 60 months. That's fine. I'm not the occupant of the property, so we can still kind of do that kind of stuff. So yeah, I'll do a balloon. So I don't have an issue with that kind of stuff. And it's just about what we're doing is we're orchestrating and guiding the seller to want to do this based upon what they're already receiving. If you're a coaching student of mine, then you have privy to some recorded calls where you actually hear the seller say that they like getting the payment and they really like their rental. They just don't want to manage it anymore. Well, that's a key component to seller financing. So how much do you pay on a monthly basis? You pay what they're used to paying as long as the amount that you're paying doesn't exceed your possible income from that. So if it's a passive income structure, so you're going to keep the property and you can rent this same $500 payment. You can rent it for $800. And you know that you have $100 in maintenance and you have $100 in insurance and taxes, that kind of stuff. So you have $100 net. I don't know if that's enough or not. I know if I had a $500 zero interest loan straight paid to a seller, that's pretty advantageous to me. So I'd have to consider a lot of different factors in this thing. But every situation's a little bit different. And I think it's important to always understand the underlying motivation of the seller. Why are they selling? What's been the benefit to them of the property in the first place? And let's face it, sometimes a seller doesn't want the burden of the tax disadvantage of selling their property on a straight cash purchase. So an installment sale or a seller carryback is great for them. I would do a seller carryback over an installment sale. But yeah, they want that. So that's okay for us too. Now, keep in mind that when we go to pay that property off or sell that property, we may be paying or selling that property prior to when the seller actually wants to be receiving their funds, and it may be uncomfortable for them to receive their funds early. Now, we'd never want to put a condition on, like a prepayment condition within our note. But if we know that if we pay them off within 60 months, it's going to be uncomfortable for them, that their tax issue is going to be so large that it's going to be bothersome to them. And although it's not our responsibility to look out for our sellers, I think we have to be human. If we know that there's a possibility of harm, that we go ahead and expose that for everybody and let them know, because all we have to do is do an exchangeable collateral or convert the note to a straight note. Now, there's disadvantages of converting it to a straight note over a seller carryback, but sometimes that's what you're going to have to do. All right? So you do exchangeable collateral or convert it to a straight note. No collateral at all. And just be open and honest, create a fair win-win situation. Question number 2. Do you believe it's worth it to use a local phone number instead of a Google Voice when sellers call? I have some feedback from sellers that they are not happy with calling a Google Voice number. I know about Google. I know what Google does. I know that they have like the Google search engine, and they have Google Maps, and they have the Android, and they have, Google Cars and stuff like that. I've never used them for a phone number. I can see a huge disadvantage of using them because of the limitation they have on their phone number. And I like using Ring Central only because, Ring Central's a Ford, and I like Fords kind of thing. I don't like Fords I like Bentleys, but that's what I mean by that. I don't like Ring Central because of it's like sliced bread. I like it because I've used it for a long time, and the biggest thing I like it for is the fact that I could actually call someone. And I can get multiple phone numbers, and I like their call forwarding functionality. I like their voicemail functionality. I like their round robin functionality. I like all that kind of stuff that they have. And sometimes, there's this adage, you get what you pay for. Because Google Voice is free, don't expect much. And if you want to have a business where you don't expect much, then use service providers you don't expect much from. I don't know if that made any sense, but if you swim around with things that you can't expect much from, you can't expect much. So that's what you're going to have. It's not much. But if you hang out with people that are and service providers that are top quality, that you can expect a lot, that you can get a lot, yes, they may cost you more money, but the reward is much greater than that reward is when it's free, because free is expensive. And if you doubt that, you haven't been in business long enough. So I would use Ring Central. I wouldn't use Google Voice. Question number 3. How do I search for properties that I want to buy as rentals that will be paid within 24 months? Well, you find an area. I mean, there's 114 major markets in the United States that I've kind of looked at. And you start doing some work on finding the median values. You start doing some work on rent rolls. You want to make sure that your rent rolls and your median values, the equations there are pretty consistent to your need of 24 months to pay back your costs. But here's, I think, the bigger answer to your question, because I think your question's important. But here's how I do it. And how I do it may not be the way you want to do it or you guys want to do it, but this is how I do it. I look for flips. So I look for hotel possibilities, properties that I can flip for profit. Inherently in that, I'm going to find the houses that fit the model of I can buy the house and it pays me back in 24 months. I just know that. Absolutely know that. So if that's the case, I'm not going to intentionally search for them because I know I'm going to find them. So, but if I wanted to intentionally search for it, I would go to the 114 cities. I'd look at the median values. I'd look at the rent rolls for those 114 cities. I'd find the highest impact or highest concentration of properties that would fit that scenario of getting my costs paid back to me in 24 months.
Thanks for listening. We'll be right back. Are you running out of leads? It's time you tried Yellow Letters at yellowletters.com. Get motivated seller leads through yellow letters, postcards, zip letters, typed professional letters, greeting cards, door hangers, and business cards. Yellow Letters is a full-service marketing company created with your success in mind. Get the personal attention you need to get your direct mail campaign started and get in touch at yellowletters.com.
And we are back in 3, 2, 1.
Question number 4. How do I handle everything when I'm in the middle stages of growing and learning? Meaning, I do not have enough calls coming in to hire someone to answer the phone, but I have so many that I'm consistently very busy. Well, welcome to entrepreneurship. Welcome. I'm glad you've made it because it's so much nicer on this side of the world, on this side of the fence. But you have to realize that, yeah, we all go through this. How do you handle everything? Man, I always use it for marketing, market more, live less. Well, work more, live less kind of thing until you get over that hump. I mean, we all do it. But for me, I don't look at it as work. I don't look at it as something that's a negative. I look at it as a positive because I want to do it. I want to do more. So I don't look for a frustration of limited growth or what have you. I just push it forward. I mean, I'm just that crazy. I just absolutely will make it happen. And I was blessed with that attitude as a youngster. I was told almost daily that I could do anything I wanted to do, and I just internalized it and believed it. And so everybody else can too. I mean, it's, you can if you think you can, and you can't if you think you can't. So both those statements are correct for you, depending upon how you think. So how do I handle everything in the middle stages of growth? You just work more. That's all you do. That's all you do. You work smarter. There's the rule of 51 hours. And I think a lot of people don't understand time management. But for me anyway, if you broke down time in those 51 hours into 3 segments of 17 hours, then look at each segment of 17 hours as doing something. So you have your A category, you have your B category, and your C category. Well, my A category is I want to talk to sellers, I want to get contracts signed. Well, what hours of the day within my 51 hours a week, within my 17 groups of 17 a week, can I talk to a seller? Well, I can't talk to sellers at 9 o'clock at night, so they wouldn't go onto my sheet or my calendar or my whatever it was as a block of time to manage in talking to sellers. So maybe I talk to sellers at 10, 2, and 4. So that would be 9:30 to 4:30. And I take a lunch off in the middle. And, maybe I don't do it that much because I'm not that busy. So whatever 17 hours looks like at that point. Well, then you have another group of 17 hours. And that's the stuff to manage your business, where the management of your business requires other people. So what I mean by that is, you can't do it on your own, meaning you have to talk to somebody. You have to order mail. You have to, get parts from Home Depot if you're flipping and rehabbing. You have to, whatever it is. You can't do it without another person. So you can only do it when other people are typically working or open for business. So, but it's not the important work, like getting contracts and selling contracts. It is that second stage or tier of importance. Like, it's really important, but the other thing is more important. So you want to dedicate the prime time to that other thing. This is secondary prime time. And then your third category of 17 hours is all the other crap, all the other stuff, the dreaming, the doing the cookbooks, doing the this and doing the that, and organizing and maybe calling people that you can speak to after hours, setting up contractors or inspections and those kinds of things. Now, some of that calling of those contractors and inspections, maybe in the beginning you have to put that in tier 2 because you don't know them. So you have to be talking to them during their work hour. But once you know them, they can go to your tier 3 because you have your nighttime cell phone numbers of them and those kinds of stuff, those kinds of things. But you break your weeks down into, the 3 groups of 17, I think you'll be fine. You just have to do it and then rely upon it and maintain it and commit to it. I think that's the biggest key is we don't commit to what we want. We want a lot, but we don't set it into a cycle or into a system and actually maintain it and utilize that system and fall forward. We just say we want to do it, and here we are. We want to do it. Now, what are we doing right now? Kind of thing. When is the best opportunity to listen to my podcast? It's certainly not during the time that you can talk to a seller. It may be on the time to go to a seller. And you can get your calendar and you can magnify it. You go, okay, on the way to my seller, I'm going to listen to podcast 47, whatever number, because that's the one that pumps me up the most. I want to listen to that every time I drive to a seller. Every time I make seller appointments, right before that, I'm going to listen to 15 minutes, or when I get up in the morning while I'm eating my breakfast, I'm going to listen to podcast 37, because that's the one that talks about how to talk to sellers over the phone. So I want to listen to that one. So, put into your day when you can do those things that you need to do, but that they're not taken away from the key component of buying houses. And I hope that makes sense. And because I think time management is one of the most important things. And the more questions I get on it, the more in depth I'll get into time management for you folks. But it is, I hate the word but. I like the word but, depends on how you use it. But with that said, I think time management is extremely important. A lot of us don't utilize it correctly. And it is a system within itself. And anytime that we begin a system and we create a pattern out of it, so we do it for 21 days or longer, then we know we can do it. It's that first 21 days that's really hard, to do something new on a regular basis, but we kind of have to. Question number 5. What are the top books in real estate that you suggest to a brand new investor? Wow. Well, number 1, the Bible. And you could probably read that like 4 times before you read any other book. So Bible would be first. I know it's not politically correct for you agnostics and atheists and people on the fence. However, that was a question for me. It wasn't a question for anybody else. Hope I don't have a lot of people hanging up on me right now. However, it is what it is. So Bible, I would do Michael Gerber's original E-Myth. I would not do Michael Gerber's Investors E-Myth. I wouldn't do his Contractors E-Myth, and I would not do his Professional E-Myth. And there was reasons for it. It's the Michael Gerber original E-Myth is Michael Gerber and his raw opinion of entrepreneurship. Some of the other stuff is so clouded and so commercialized that you're really just buying the book cover. You're not buying the substance. As an example, I know the folks that wrote one of the books with him, and I'm kind of embarrassed for Michael Gerber that he actually had them help him write that book, because I know their level of experience and the level of what they do. With that said, so E-Myth original, the original one, Pitch Anything I like. It's a great book on framing and selling and those kinds of things. So the Bible, Michael Gerber, Pitch Anything. Other than that, probably kind of a weird one. I'm going to say this, and people are going to go you're going to laugh at me. Don't laugh at me too hard, because I'm laughing at me already thinking about what I'm about ready to say. But there is so much truth behind this statement that I have to say it. Probably the 4th thing, and maybe not even in that order, that I would read is my contract. Because I think, especially my contract, which is 9 pages long. If you read my contract, which was only 9 pages long, so it's a fast read, it's toilet sitting time reading. And then you started going backwards and started reading it again and then again and then again. And then instead of a macro perspective of it, you had a micro perspective of it. So now you knew what all the statements in there meant, why they're included within the agreement, what they mean to you and the seller, rather than them just being dots and crosses and lines and circles and slashes on a piece of paper. I think that would be a perfect read for most every investor, seasoned or beginning. I'm amazed how many times an investor will sign an agreement even though it is their agreement, but yet not know how to explain that agreement to the party that's also signing. And I think it's shame on us, because I think at the end of the day, in fact, I know at the end of the day, it's our duty. We are supposed to have a sense of professionalism that far exceeds what normally is expected from a professional. So if you look at a professional and how they appear and how they carry themselves, your professionalism should be that magnified. So when you look at someone and you classify that guy or that gal is professional, I want people to look at you like that person is not professional in comparison. That's how professional I want you to be. And I think we get there by doing some of the right things. We run our business ethically, morally, and legally. And it's tough some days to run it ethically and morally. Legally is easier because those are guidelines set for us. Society has said, from a legal perspective, stay within these boundaries and you'll be legally okay. Society sometimes set, but they don't put it in black and white, the set of morals and ethics we should have. And there are those out there that are less professional and have less ethics and morals. So those are the books: Bible, E-Myth, the original. Certainly not E-Myth, investor, E-Myth, contractor, E-Myth, professional. I went through the E-Myth program, by the way, if anybody is interested, the mastery program. And a pretty interesting program. So they teach you how to be systemized. And I love it. I loved it. Some of the things seem childish. Some of them seemed childish until we realized why they were having us do what they had us do. And then it made perfect sense. So as an example, I'll leave you with this and then I'll hang up and let you guys go on your day. There was a round table, and it was a big round table. And I'm going to paraphrase for you guys. And it was at the Ritz-Carlton. And the topic at hand is why the Ritz-Carlton sells a $31 hamburger. You can go to McDonald's and Carl's Jr.'s and you can buy a hamburger less expensively than the $31 at Ritz-Carlton. So it went around the table and everybody had their opinion of why the Ritz sold their hamburger for $31. And the conclusion of Ritz-Carlton systemization, that answer was, because that's what their client expected to pay. And there's truth behind that. There's absolutely truth behind understanding what our client, what our prospect, what our customer expects out of us. And if we don't know it, we can't expect to become the Ritz-Carlton of our industry. And they figured it out for themselves and through systemization, it was apparent that they could sell more $31 hamburgers than they could $15 hamburgers. And nothing be different between the quality of the 15 and the 31. Because perception, when done correctly, when used correctly, and we use it when we speak to sellers. I mean, that's what embedded commands are all about. That's what mimicking and pacing and neurolinguistics and positive negative reinforcements is all about. It's a perception that we're allowing our prospect to have of our ability to buy their house and our ability to solve their problem. And we must learn how to do that. If we don't, we're getting lucky at best, and it's very, very hard to duplicate luck. Is it impossible? Probably not. Is it possible to do more in life through systems and through understanding than it is by being lucky? Yes. So that's all I got. Just to recap, don't forget to do your marketing. Yellow Letters has that platinum card. It's 15% off all your purchases in 2016. It's friggin' outstanding. Again, if you want to talk to me about my coaching program, text the word investor to the number 313131. Again, the word investor to 313131, and I will have a conversation with you, go over my program, and get you started. Appreciate you guys, and I'll talk to you soon. Bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.